Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 13th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES in the daily time frame, beginning the week on a bearish note here, selling pressure here to begin the week. And this is after the previous week's inverted check mark move downward and a close below the key range low. This key range was developed in December here. Great key range to begin the year with, and we're now below that level at the moment. One of the things we talked about Friday afternoon in our trading room was if we begin the weeks with selling pressure, Sunday and Monday here, that could lead to a bit of a bounce back opportunity back toward 59.40, 59.50 as perhaps a follow-up check mark type of week develops here. Now we do have relatively light economic calendar here to begin the week on a Monday, but Tuesday we have PPI and core PPI data, and on Wednesday we have CPI and core CPI data. Thursday is going to be a huge slate of economic data as well, but really the big two items going to be Tuesday and Wednesday with PPI and CPI on deck, so that could provide quite a bit of volatility later on this week. Now for today's session, keep an eye on the previous session's low, the previous week's low. That's 58.45. If pricing managed to reclaim that level, there could be a little bit of a pushback up into the range. Anytime you have a good key range like this as well, the 25% extension here can oftentimes provide a great bounce point. That's going to be 57.91 half. That's close to the 5800 market structure level. So even if we did drop a bit more, there could be an opportunity to see some sort of reaction off of that low. From a broader standpoint, I have mentioned before, especially in our monthly market outlook. If you missed our monthly market outlook last Tuesday, you can find it in the description below. There's a link to the recording there. 2 hours of content right there. And one of the things we mentioned was we could be looking at overall selling pressure ahead toward the previous quarter's low, and if price can get down into that previous quarter's low and below it, there could offer a trap opportunity for a reversal back up by the end of the quarter. That could be best case scenario from a bullish standpoint here. Wipe out some of the stops, wipe out previous lows, fill the FOMC key level below from the September meeting. So anywhere between say 5600 and 5700 could provide a big time trap for a rotation up. Until then, we could be looking at a pullback and drop into that level up ahead. So still more downside likely ahead, but there could offer an opportunity down the road. Now looking at the NQ, this one down as well heading into the RTH open. It's also trading below the key range low. It also had an inverted check mark week last week, and we're starting the week on a bearish note here. So again, if price can reclaim the previous session's low, the previous week's low, that's 20,875s. If we can get back above that level, there could be a little bit of a push higher to begin the week. And of course, even if we did pull back, there could be more near-term selling pressure ahead. So this pullback could still lead to selling pressure like this. We've already seen that play out on 3 rotations over the last few weeks. So we could continue to see that type of selling pressure. This one also has the quarterly low down below. That quarterly low is right here near a rising 200-day moving average. If we do continue to see selling pressure here, a trap below the quarterly low could offer a really good buying opportunity for a continuation back to the upside up ahead. So even if we see further selling pressure ahead, that quarterly low is going to be very, very important down the road. Looking at crude oil hit our upside target already. Has already hit our upside target to begin the year. 78.50 was our upside target. Basically the October 8th high here, which is 78.46 to be even. We talked about strength to end the year and strength to begin the year that would take us into the 78.50 level and that key range high. And again, it's only been a few trading days and we've already reached that target right away. We did mention any pullback along the way could be a buying opportunity, even as deep as 72s, although we never got that deep and instead big time squeeze to the upside. We also mentioned here that 80 as kind of a round number target could be in play, and 81.5 as a 2-year volume area high. So value area high, that is. That could be in play, 81.5. Now from a long-term buy or long-term bullish target here, I mentioned before, especially in the monthly outlook, that we just haven't really seen a whole lot of price action beyond the 85s. Here's 85 about right here. Last year, as high as we got was about just shy of 88s. We just couldn't get really beyond that level. So while short term we could see a move into 80 to 81.5, as high as we go likely is about 85, and then we turn back down towards 77. So this market remains strong overall. After hitting this key range edge, though, do we see a little bit of a pullback? Does that pullback allow for a buying opportunity into 80 and 81.5 ahead? Looking at gold futures, this one down about 0.8% right now. This one had a bit of strength here to finish out the week last week, back down right now off the key range high here. Again, this market continues to develop within kind of a compression triangle type of pattern here. We do have a wider pattern as well, but this is kind of the upper line of this pattern that's developing right now. The lower line is like this, and we're seeing back and forth chop here near the middle. You do have the wider range as well, 2450 down below, up towards 2800 up above. And then you have that midline right around 2675. So we have continued to see this market build out within this range. It's hard to bet against gold, though, on a longer term basis. This market has been so bullish. It's continued the trend higher. It continues to build sideways and then flow higher, build sideways, flow higher. This seems like just kind of that long-term defensive style asset at the moment. And so at some point here, the expectation is we rotate higher and push through highs on a medium-term basis. So that's why it would have been nice to have seen a drop back toward 2540. That could have provided a trap and kind of a medium-term play back toward 2800 and beyond. As of right now, there could continue to be more back and forth action here, but with an upward bias on a medium-term basis, which could eventually take us to the upside. This compression here could unravel itself to the upside for a big-time push down the road. Looking at the YM down 0.1% right now. This one is kind of led lower overall. It has seen weakness over the last 5-6 weeks and is sitting right on top of the Fed level here from September 18th. That's the level right there, right around 42,000. You have the quarterly low just below it, and again, that was a target we talked about before. Last week on a Monday, we developed that wick reversal right there, and the idea was for bears to defend pullbacks each morning for a continuation downward toward this quarterly target. So we still have a little bit more to go to the downside to reach that target. Even if we bounce early this week, it could still lead to selling pressure up ahead. And again, if this is your quarterly target here, your quarterly low, that's also the previous key range low here. A trap below that level could provide a great opportunity for kind of a medium-term bounce back up the way. So still looking for a little bit more downside, although if we see a little bit of a recovery of the previous week's low, previous session's low, that could lead to a little bit of strength here early this week, even if that strength leads to another round of weakness. So again, it's trying to find that strong low on this bottom end of the chart for kind of a medium-term recovery. Looking at Bitcoin, this one down pretty heavy here today, 3.5% lower here. Nearly an outside day down. 375 is the high. Actually, it is an outside day down, so that did take out the high by a little bit. So it's an outside day down at the moment by a little bit, and testing new lows for the first time below 92s in a long while, and nearly hitting 90K. The low here is 90,520. We really haven't hit 90,000 since it took it bid on the first test of it back here. So big time weakness here over the last several days. We're still seeing kind of a rounded top pattern develop here. We still have this very thin part of the profile down below here that could need to be filled down the way. And if we did sell off and drop into that zone, it could provide a long-term buying opportunity for a rotation back up. 75 back to 100K, perhaps even 75 up to 125 down the road could be ahead. So again, this market continues to remain bullish on a long-term basis. Near term, we could see further back and forth price action with a bit of a downward bias until proven otherwise. We are also testing right here. That's the 55 period PIMA. In a very bullish trend, you tend not to test that level unless you are either going sideways or breaking back below it in the near term. So just to test a level like the 55 period here would suggest a bit more sideways to down up ahead. Rounded top, continued weakness. At some point, perhaps a strong low could get this thing going back to the upside down the road. Looking at Ethereum, this one down even heavier here today. Outside day down 5.5% lower, and is now testing prices below the key range low. Also hit prices just above the 3,000 level. I've mentioned before, this key range is a very, very nice key range here. From that low here, that high there, the midpoint right there, that large key range points to a long-term target at 5,200 down the way. As we mentioned before, though, any test down here could provide a trap for an eventual rotation back to the middle of the key range, back to the high, and at some point down the road, likely into that 5,200 level. Now, if price drops as low as 2,600, that could pave the way to 5,200 for a double down the road. Can we get to 2,600? That could provide a free trade opportunity on a long-term basis for those looking to engage Ethereum. As of right now, still weak at the moment, and anywhere in this green zone right here could provide a trap back to 3,600 on a short-term swing basis. All right, that is it for now. We'll see how this plays out here heading into the rest of the week. Good luck, trade well, and I'll see you in the trading room. Take care.